Hello, I'm Rob Arnott, founding chairman of Research Affiliates. This spring marks our 20th anniversary. First and foremost, I want to thank all of you, our investors, our clients, our distribution partners, and our team for sharing this wonderful journey with us. We're grateful for your confidence in the quality of our research and ideas over the last 2 decades. We've always aspired, as our mission statement suggests, to be the preeminent source of insights and products that transform the global investment community for the benefit of investors. Let me highlight a few words here. We aspire to be the dominant source of transformative innovation in the global asset management arena, focusing on delivering incremental benefit to the end investors. We want to address the unmet needs of the marketplace, not just the popular current demands of the marketplace. We're unusual in that we're singularly focused on research and product innovation, not distribution. We work with leading financial institutions to make our ideas and solutions available to the marketplace through mutual funds, ETFs, separately managed accounts, and other vehicles. These distribution partners, organizations like PIMCO, Schwab, FTSE Russell, Legal & General, Invesco, and so forth, they don't need us. They have their own deep R&D teams. We meet their needs if we serve as an extension of their own R&D capabilities, bringing ideas to them that are complementary to their existing product offerings. They, in turn, are our distribution arm. We don't need to have a trading desk, a back office, trade reconciliation, client reporting, call centers, and so forth. The model works. Today, nearly $170 billion in assets are managed worldwide using investment strategies developed by our team. There's a wonderful observation, often attributed to Peter Drucker. Culture eats strategy for lunch. But culture is a moving target, always aspirational, never fully achieved. At Research Affiliates, we build our culture around the values of responsibility, curiosity, authenticity, and collaboration. When our team is aligned by our values and our mission, we're in a better position to collectively drive innovation in the pursuit of our mission, serve as thought leaders in the asset management arena, and develop strategies that add value for the end customer in the long run. The firm wins in the long run, as do our clients, partners, employees, and of course the end investors in our strategies, if we stay true to this mission. We're best known for our work in smart beta and global asset allocation. Years before the label smart beta emerged, we introduced the fundamental index concept in the Financial Analyst Journal in March of 2005, which we had just launched as RAFI, the Research Affiliates Fundamental Index. The fundamental index weights companies based on the size of the business, not based on the popularity of the company, not based on how much the market value is, and not based on how extravagantly expensive the company is. By weighting companies based on measures like book value, cash flow, dividends and buybacks and sales, we sever the link between the price of a stock and its weight in an index, which is the Achilles heel of cap weighting. In so doing, we introduce a dynamic value tilt, mild when value is fully priced, and extreme when growth stocks are in the stratosphere, as they are today. During those early years, exciting work was not only emerging in the smart beta arena, but also within asset allocation. In early 2002, PIMCO's Brent Harris approached us about launching a new strategy to tackle a few critical issues that investors faced. In a low-yield world, the likelihood of low prospective returns for mainstream stocks and bonds, a lack of true diversification in conventional balanced portfolios, which typically merely mimicked what investors already owned, and, important today, a vulnerability to inflation. Remarkably, no single solution was then available to address all three of these needs. In partnership with PIMCO, we created the All Asset Strategy, a one-stop shop for real returns, for inflation protection, and for access to liquid alternative markets, offering diversification away from mainstream 60/40. I'm honored to say that in this capacity, PIMCO allowed us to serve as their first and, to this day, their only external sub-advisor. It bears mention that innovative research has always been and will continue to be at the core of what we do. All of our insights, including over 425 published articles in just 20 years, can be accessed on our website. Let me highlight a few of our award-winning research papers over the years. In Rebalancing and the Value Effect, which won the 2012 William F. Sharpe Award for ETF Indexing Paper of the Year, we demonstrated that much of the advantage of value strategies is attributable to reconstituting and rebalancing the portfolio, which in turn creates faster portfolio dividend growth, even though the individual stocks on the value side of the spectrum have slower dividend growth. In Demographic Changes, Financial Markets and the Economy, a Graham and Dodd winner from the CFA Institute in 2013, we analyzed the impact of demographic changes on the economy and capital market performance. In March of 2013, we published an article entitled A Framework for Examining Asset Allocation Alpha, winner once again of the William F. Sharpe Award for Paper of the Year. We sought to decompose portfolio alpha into two parts, asset allocation and manager selection, and study the value-added drivers within the asset allocation alpha. In the surprising alpha from Malkiel's Monkey and Upside Down strategies, which won the 2014 Bernstein Febosi Jacobs Levy Award from the Journal of Portfolio Management, we shed some light behind the paradoxical finding that seemingly nonsensical strategies, even those derived randomly from Malkiel's legendary dart-throwing monkey, can soundly outperform the market. In 2016, in Will Your Factor Deliver? An examination of factor robustness and implementation costs, yet another Graham and Dodd winner from the CFA Institute, my colleagues developed a framework to help investors discern which factors are indeed robust and profitable, categorizing the robustness of the 6 most prominent factors. In 2018, we won another Bernstein Febosi Jacobs and Levy Award for Best Article in King of the Mountain, the Shiller PE and Macroeconomic Conditions, where we found that unusually high or low inflation and unusually high or low real interest rates tend to go hand in hand with lower valuation multiples for stocks all over the world. This work may be of particular relevance today with inflation soaring and real interest rates starkly negative. Free money is never good. In 2019, our team won the top Graham and Dodd Award for What is Quality? This article showed how radically different one quality strategy can be from another across a host of commonly applied quality definitions: profitability, accounting quality, payout dilution, and investment, and how different these results can be. In 2020, we won yet another Bernstein Febosi Jacobs Levy Award from the Journal of Portfolio Management for Alice's Adventures in Factorland, 3 blunders that plague factor investing. We detailed the 3 under-recognized problems that are the reason factor investing has failed to live up to its many promises. And last year, in Reports of Value's Death May Be Greatly Exaggerated, which won a Graham and Dodd Award for 2021, we concluded that value stocks are not structurally impaired, but have underperformed simply by getting cheaper and cheaper relative to growth stocks. Absent the erosion in relative valuation multiples, value would have beat growth pretty relentlessly since 2007. If there's any mean reversion in relative valuations, as we've recently seen, this should deliver massive gains for today's value investors. Alongside actionable practitioner and research insights, we've launched 2 interactive tools for the benefit of our investors: our Asset Allocation Interactive Tool and our Smart Beta Interactive Tool enable you to view our long-term forecasts of return and risk for over 130 asset classes and over 160 smart beta and factor strategies, and to build customized portfolios. These have collectively had well over 3 million unique hits in the last 5 years from people interested in our work. And we invite you to join the 17,000 investors who receive data updates to these tools. These websites have classic internet pricing. They're free. We recoup the cost of developing and maintaining this work only if users are drawn to our many asset management products. Also of note, consistent with our focus on delivering high-quality index products and investor advocacy, in 2016 we launched our sister company, RAFI Indices, which constructs, publishes, and licenses indices based on Research Affiliates' insights and strategies. Over the last several years, aligned with our belief that investor preferences are broader than risk and return, we've expanded our offerings to include a wide roster of single, multi-factor, and ESG-based climate transition and carbon-reduced indexes. Last but not least, as we look forward, our team and I are excited about what lies ahead. Innovation will continue to be central to our mission as we develop and enhance strategies that can help investors achieve their long-term investment goals. Replicating others' ideas is an assured path to average returns. At Research Affiliates, we cheerfully accept the risks that are inevitable for any truly disruptive idea or innovative enterprise, even welcoming the attacks that are inevitable from the guardians of the status quo. We'll continue to ask ourselves a few questions to guide our innovations. Where is conventional wisdom ignoring the lessons of history? Where do widely held beliefs lead investors astray? Where is best practice missing the mark? Can we create better solutions to serve our customers? As we answer these questions, we help you and your clients reach your and their goals. Thank you for joining us on this journey. We look forward to the adventures that the future has in store for us.